Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week. Hello again, fellow BeachBum traders. We hope that our game plan from last week helped you make money during the first week of the late September swoon. And now let's prepare our game plan for the week of September 27th through October 1st. We'll talk about some of the events from last week and how we can prepare based on those events for inflation, future Fed tapering, and higher interest rates to come. So there were a lot of events last week. On Wednesday the 22nd, the Fed announced that they had increased their estimate of inflation up to 4.2% from something like 3%. So they are estimating increased inflation. And you may have heard on CNBC, etc., that the Fed's decided to will likely start tapering in November. Everyone kind of expects that since there is no October Fed meeting, they will probably announce their plan for tapering starting in November, possibly start tapering in December, probably concluding in the middle around June of 2022, and that they wouldn't start increasing interest rates until after they completed their tapering, possibly starting in the second half after June of 2022. You may have heard them talk about the dot plots where several of the Fed officials are projecting 3 rate hikes by 2023 and 3 during 2024. So in this week's game plan, we want to prepare for those events that we're likely to see higher inflation in the short term. We're likely to hear the announcement of the start of tapering, but not until November, and that tapering likely will continue through the first half of 2022. However, as we'll talk about in a minute again, even though the Fed's tapering, they're still buying bonds, so they're still supporting the market. And in my humble opinion, you saw an initial rally right after that Fed announcement, and I believe that it rallied short term as they didn't announce that they were going to start tapering immediately, so they put it off a little bit. And the fact that they're going to be tapering through the middle of June of 2022 means they're going to still be buying bonds. They're still going to be supporting the market. We're not expecting any interest rate hikes until the second half of 2022, which essentially means more of the same. So I believe we saw that short rally, even though we're in the late September swoon, we saw a rally because it said, hey, the Fed's still supporting us, the Fed's still got our back, and we can continue on our merry way. So even though we saw a brief rally after the Fed meeting on Wednesday, so Thursday, Friday was kind of flat, we'll see that in a minute, please remember we're still in the late September swoon. We just got through the first week of the late September swoon, which is historically a decline in the markets through the last half of September until possibly the second week of October. And Jim Cramer calls the second week of October maximum pain. And he said that the last week of September could be the most brutal. So we're headed in the last week of September. So just, be careful, be cautious, be watching which way the market's going. But, the historical expectation is down. So We'll talk about, how can we make money in this late September swoon? How can we play the choppiness? Friday was choppy, mostly flat. We'll talk about some of the issues now that may cause a potential decline, black swan event. Otherwise, with the Fed supporting the market, I don't expect a major correction unless we have some kind of black swan event through the middle of October. Once we hit the Fed announcement of the tapering expected in November, we may yet still see a taper tantrum, even though the Fed's been, broadcasting, hey, we're going to announce it, we're going to start, etc. The market has a tendency to throw what they call a taper tantrum when they finally do pull the punch bowl, as they say, and start tapering. Even though, again, it doesn't mean they're going to stop immediately buying and start raising interest rates. Again, the market may react negatively to that event, and you want to be prepared. So what are some of the other issues that might cause a decline, even a sharp decline or correction at this point? Well, as you hear, the government's having issues with raising the debt ceiling. And if they don't raise the debt ceiling, it may shut down the government for some period of time. Typically, this only lasts, a very short period of time, a couple weeks, but the impact of that is, government contractors don't get paid, they go home, there's a lot of uncertainty. It shakes people's confidence in the economy if the government's shutting down. So, given that issue, with a possible government shutdown, now maybe they'll resolve it at the last minute, but I would recommend staying away from government contractors, particularly defense contractors, until after this whole government shutdown thing gets resolved. The reason being, again, is they're already talking about deferring payments to government contractors because they don't have the money within the debt ceiling. So again, I would stay away from defense contractors until a quarter after the issues are resolved, the government shutdown ends, because again, if they don't pay the government contractors, that's going to impact their earnings for the quarter in which the shutdown occurs, so they're going to have less than expected earnings when they announce that quarter. So again, I would stay away from those. The other black swan events, we heard China crack down on cryptocurrency. That caused a major decline in cryptocurrency. We had the Evergrande issue in China, and that people believe that's what triggered the initial decline this week, was just the uncertainty whether that would ripple through China's economy, would that affect global economies. And the market kind of decided, well, it shouldn't affect U.S. and other markets. And so with that and the Fed meeting announcements, we got a short rally. So next we'll look at what actually happened. How do we end the week? What do the futures look like? What do the indices look like? And how are we going to play this for this week? Okay, briefly before we look at the futures, I wanted to bring up the TLT, which is the 20-year Treasury, and we can see it was a little strange right after the Fed announcement that the prices in the Treasuries popped. I'm guessing people jumped in to buy, thinking that because the tapering was delayed that maybe there would be an increase in demand. However, on Thursday, Friday, it precipitously fell because tapering means there's going to be a decrease in demand. So this is the TLT, and congratulations, and I'll mention this again when we get to our watch list, but if anybody caught the bottom of the TMB, which is the inverse of TLT, which is the bullish on yields, bearish on price, if you caught that bottom on early Thursday, got a nice gain on Thursday, Friday. So we're looking to buy that TMB on any retracement bottom because the tapering again means a decrease in demand for treasuries, which means lower prices, potentially higher yields. So we expect TMV to go up as the TLT and the prices drop. So we might get a retracement. If we do get a bounce at some point, we're going to go long TMB. So we're going to continue to watch it for opportunities due to the tapering. So now let's look at the futures real quickly. We can see the the trend, the drop, and then bounce in each of the major indices. Futures are still, they're flat right now. So again, indecisive. We see the Russell, same thing, indecisive. We can see the VIX trending down. I wanted to talk about oil and natural gas. We can see they've been trending upward. They're not quite at a peak. However, and there's natural gas, it came down but then jumped up. And our strategy for oil and natural gas is to short oil and natural gas at the top. So once it does reach a top, we're going to short those using drip. Or if just natural gas runs up, you can short just natural gas at the top using cold, KOLD. So drip is the inverse of gush, and it's probably easier to see when the top of gush is. So in terms of watching, we have a price target and alert set on drip, so when it bottoms it'll alert us. But if you're watching it, you can watch for the bottom on drip or look for the top on gush. So again, that's our strategy on oil and natural gas. We're just waiting for it to top out, peak, turn down, and then we want to short oil and natural gas. Again, some of the reasons being is that the prices are high, that's a given, but also as the refineries and rigs and all that in the Gulf come online, should get more supply, prices should decrease. There's other events that could cause the prices to decrease. So let's talk about gold and silver. They kind of declined later last week. We had a little bit of uptrend, and then they declined back to support level. So if you are not already long gold and silver, you might want to consider GLDI and SLVO, which are the Credit Suisse, they're ETNs, ETFs that pay a nice monthly dividend. So again, if you're not already in gold and silver, this might be a good opportunity to get in at these support levels. And again, we like GLDI and SLVO because they do have some upside with gold and silver, and they pay a nice monthly dividend if it just takes a while for gold and silver to turn back up. So now we will look at our watch list updates for this week. We'll wrap up, and I'll just briefly show all the treasury notes. We can see the same trend, but again, now let's see what we want to watch in terms of specific symbols for the week. Okay, so now let's update our watch list for the week of September 27th through October 1st. Firstly, again, congratulations if you got into the TMB trade before it started running on Thursday after the Fed meeting on Wednesday. Briefly look. See, it started, bottomed here and then started running up. Again, we're going to leave TMV on our watch list to see if it retraces back down to this 54.25 level or so. We'll long TMV. If not, then we'll let it go and we'll remove it in the near future. Some other changes you may have seen in the comments that we went long PetMed Express on the 22nd, and we sold covered calls against our position in Pet Express. So we posted that in the comments on last week's game plan video. So again, please watch the comments. We'll post when we take positions there and as we update the watch list on a daily, potentially daily basis. So we're now long pets, so I'm going to remove that from the watch list. And again, as we've shown before, it's really easy in Webull. This is the online version of Webull where I'm editing my watch list, and we have a separate video how to create this watch list, how to maintain this watch list.
And I'll put a link again in this game plan video below, so you can refer to that. But it's really easy in Webull. And again, our affiliate link to Webull is in the description box below as well. So you just right click, hit delete. Okay, now it's removed from our watch list. Another point is we've talked about making money capitalizing on the volatility in the VIX. This is SVXY. We have a standing good to cancel buy on SVXY at this 48.54 level. Just in case the VIX spikes, it'll hit our standing buy order, so we can catch any spikes in the VIX, which would be a drop in SVXY. So we'll leave it on the watch list for now. Actually, I'm going to remove it from the watch list just because we have that standing order there. I don't really need to watch it. It will hit if it hits, and if not, it will just stay there for like 90 days. So some additions to our watch list. This is APT. This is Alpha Pro Tech. This is a Canadian company that does PPE, personal protective equipment, and building supplies. And you can see it has a tendency to spike, and then it will come back down. It's approaching this level of support at about $7. Again, if you go back in history, it has this tendency to spike from time to time. So if it approaches this support level of 7 and or turns up and breaks that pivot point, we're going to go long again. APT. We've made money on APT in the past. So ChargePoint. ChargePoint does EV charging stations. It's part of the electric vehicle charging infrastructure that Biden's been talking about. We're looking for an entry on ChargePoint, we had a price level about 20, and you can see it broke down below that on Friday, and it's a little questionable. Is it going to reclaim that $20 support level, or is it going to continue to drop? So we're going to put that on watch to see what it does. If it does finally break through this support, we'll go long ChargePoint. If not, if it breaks down, we'll probably remove it. Another point I wanted to make with ChargePoint and the next one that we're going to look at, which is DPW, is on Friday. You'll notice it was oscillating around its VWAP, the volume weighted average price, and it kept trying to test this support level, test the VWAP, and failing. So that's why we didn't go long, because it was failing on the VWAP, potentially declining again. So we're going to see what happens with ChargePoint. Again, it seems like there's positive catalyst with the Biden infrastructure, but we'd like to see which direction it goes. Same thing with DPW. You'll see we added that on 9/24. They do EV battery chargers. It appears that they are now profitable. In the past, they were not profitable. And again, it was behaving very similarly. You can see it was oscillating around its VWAP. It was testing the support level and failing. Right now, we've got a price. We had a price target around 225-ish. We've kind of lowered that to the 220 area. But somewhere in here, if it bottoms and turns up, we would go long DPW. We may do some due diligence, separate standalone videos on ChargePoint and DPW. Please let us know in the comments if you find those standalone due diligence videos helpful, and if there's any stock symbols, tickers that you would like us to do a standalone due diligence video on. As we mentioned when we talked about the futures, we're looking at for a top in oil, and DRIP is the ETF to short oil. So we're looking for a bottom in DRIP. Again, as we mentioned, Gush is the inverse of DRIP, but we're looking for a bottom in DRIP. Right now we've got a price target of about 661. It's a potential bottom. It may break through that and go higher if oil goes higher. But when that bottoms, it turns up, or when oil and gas peak and turn down, we want to go long drip so that we can short oil and gas. FCAP is a financial institution. It's a regional bank, First Capital Inc. We added that to the watch list on 9/22. They're trading below cash. It's a low float regional bank. It pays a dividend of about 2.5%. Again, this gives you some exposure to the financial sector. Again, eventually interest rates are going to rise. That's good for financials. It should get some future headwinds from financial sector, and it's trading below cash. Several of the banks are. So we're looking at a price target around 40. Again, you can see it's a little above that right now. If it comes back to that support, turns back up, we'll go long on FCAP. FANG-D we talked about in the past as a way to short the FANG stocks, including the Chinese tech stocks, primarily in the NASDAQ. We've got a price target around 210. Again, this would only be in play if those tech stocks hit new all-time highs, and then we want to be able to short those FANG stocks. Again, Treasury yields are going to rise. They are rising right now. That puts pressure on the growth stocks, etc. So, again, if it happens to retrace to that 210 level, we'll long FANG-D again. Cold, again, is a short on just natural gas. We're looking for a peak in natural gas. You can see we have a price target. I have to go back a little bit to see when the last peak was. We have a price target about 803 on cold. If natural gas peaks, it turns down. Cold bottoms, turns up. We'll short natural gas using coal. SOX is the short on the semiconductor industry. And we've got a price target around 590 on that. I think we talked about last week that the semiconductor industry is very cyclical. There's the potential of a future oversupply. So again, if this happens to bottom again and turn up around 590, we want to catch that cycle in semiconductors and short semiconductors. Talked about TMV. Another leveraged ETF I found in running our screeners in FinViz is TTT, and this is the ProShares Ultra Short on the 20-year Treasury. It's a short 3x leveraged ETF. It's essentially the same thing as TMV. In fact, it has the same reward to risk ratio of about 1.77 for the last 52 weeks. So it's an alternative to TMV, and you can see the price per share is a little bit less. It is optionable, so you can write covered calls or sell covered calls against TTT. We may in the future use TTT over TMV. This is just one, like I said, it popped up in the screeners in FinViz, and so I did some research, and it looks like that may be a preferable alternative to TMV going forward. UVXY, we've talked about numerous times. This is the long on the VIX. If the VIX bottoms 16 or below, it turns up, then we want to long the VIX. So again, opportunities to make money on volatility, even though we're in this late September swoon, plenty of opportunities to make money. It's just where to look and how to play. So hopefully this will help you all. VOO is one that we're looking for a long term. This is the Vanguard S&P ETF that pays a dividend of about 1.34%. Has a very low expense ratio of about 0.03%. And this is one that many people recommend as a good low-cost index fund that tracks the S&P 500 for a very long-term hold investments. And if you listen to Jim Cramer for any period of time, you'll hear he does recommend index funds, and he says, put your first 10K in a low-cost index fund tracking the S&P 500 and just let it go, because the S&P, as we've looked at before, is in a long-term uptrend channel. So if BOO ever comes back down to a 390-ish level, if we get one of these 5% corrections in the S&P, and it comes down here, we're going to go long a chunk of money and just let that run for a long-term investment on the S&P 500 and collect the dividends. Again, this is for long-term investors, long-term holds. The last one, we added Svxy on 923. We're looking currently, we have a price target of about 1075. We're looking for it to come back down to that range and then turn back up. The reason we're adding that is we saw that ARK, or Kathy Woods, had several buys in the ARK W ETF on 960 through 921 on Svxy. So ARK's been buying Svxy. So we took a look, and it does look attractive at this support level. So if it comes down here, turns up, well, we'll go long Svxy. We did check some of the other AR. This is an augmented reality, virtual reality play. And we checked some of the others that are in that space, which is Eman, Imagine, and Copen, KOPN. And neither of those, they're a little bit higher. So we're just looking at Svxy at this time. So those are our updates to our watch list. And we'll talk about some strategies, and then we'll wrap up for the week. So as we talked about, we're expecting in the long run increased inflation, increased rate hikes, interest rate hikes. Again, all of this, in the future in 2022 and beyond, and the Fed tapering. So if we're thinking long term, and we know we're currently in this late September swoon, so we're expecting, the trend to be down, but thinking long term, let's talk about some strategies, that can help you, particularly if you're a long-term investor, or if you just want to make some long-term investments to sit there while you do shorter-term swing, day trading, etc. So the first point is, don't sit on cash. Cash, there's one of the financial guys said cash is trash. But the point is cash doesn't make you any money right now. So you don't just, I hear some people say, oh, I'm just going all cash. Well, okay, that doesn't do you any good. You can put that cash to work. If you think the market's going down, then short the market. If you think volatility is increasing, then play volatility. Don't just sit on cash. Invest your cash in some asset, stocks, bonds, whatever, real estate, something that's going to pay you a compound annual dividend over inflation. Now, the Fed's targeting a 2% inflation, but they said this year, next year, it's going to be over 2%, could be 4%, could be higher. So you need to be making, if you're looking long-term, particularly retirement, fixed income, etc., you need to be making more than inflation, so you need to be making more than 2% of your cash. So one of the ways is dividend stocks, and we've shown you in the past, how you can search for a dividend stock with a greater than 2% yield in FinViz. And again, you can find that in our previous videos. We've got the search for stocks in FinViz. You can reference that. You can find our affiliate link to FinViz below. So that will help you find dividend stocks that will beat inflation. Park your cash in assets that are low risk, low volatility, so these oscillations in the market don't cause you stress, and they have an annual growth that's going to beat inflation or be more than 2%. So again, for the long term, that's what we would recommend. Again, inflation is going to be increasing. There's talk about stagflation, etc. I don't know if that will happen. But sitting in cash your cash is going to lose value due to inflation, rising interest rates, etc. and there are ways to invest that cash to make you more money than losing it due to inflation. Also, I want to point out, and hopefully you've seen, that we've started posting updates to our watch list with our current buy and sell targets in the comments of our BeachBum Trading weekly game plan videos. So please keep an eye on the videos or the comments section, as we will update those when we make any changes to our watch list. And again, we're including our current price targets in those comments, which is a auto-generated posting. One of these days I'll show you how I automatically generate that posting from our watch list. And please see some of the related videos that we've mentioned. We'll put links in the comments below to these related videos, and please add your comments and let us know how we can help you be more successful in your trading. Just let us know how we can help. We will do what we can. We wish you the best of luck in your trading this week, and have a great day.
We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week.